Welcome to this video today, which is on Sunday the 5th of February. What we're going to be doing today is doing some very simple technical analysis to isolate some big support and resistance levels in a couple of pairs, and then use the CFTC Net Traders tool to give us clues on where prices may go. Now, regular viewers of our videos will know we've done quite a few videos this year focusing on this style of trading. And in terms of the pairs we're looking at today, we're going to be looking at USD JPY as the first pair, AUD USD as the second pair. Now, in terms of USD JPY, we've done, I think this is the fifth video summarising the price action in terms of the pair this year. And at the start of the year, we're saying the CFTC Net Traders report was giving us an indication the prices would top out into the 118 level. We set a target initially of 111 on the downside, and then our second target is 106. Now we are coming down pretty close to our first target of 111, so just want to update the price action, look at the latest CFTC Net Traders report and see what clues that is giving us. Also want to look at AUD USD. We've done a couple of videos on this one as well in relation to CFTC Net Traders. Did one just after Christmas, and we did one just at the start of the year. One winning trade, one losing trade so far. Now, in terms of the way the setup is at the moment, I think we could be on the verge of a major move. And in terms of AUD USD, I want to specifically look at how the rate of change between the groups on the CFTC Net Traders report is giving us clues that we could see a big move. Okay, now in terms of what I'm going to do now, I'm going to just go through USD JPY first. We'll update that chart, then we'll move to AUD USD, then I'll be back and we'll sum up what we've seen technically on the charts. I just want to make a few additional points in relation to the pair. So let's start with the charts. The USD JPY monthly chart. We're just going to look at the monthly chart before we look at the daily and the CFTC Net Traders, just to see the big levels. Now, on the chart, beginning of January, we expected the 118 level to provide resistance, and I've noted the exhaustion candle came back through. Nice big fall to the downside. And now we have this red candle here, and I've put resistance now as 114.50, which is the top of this candle here, the body here, top, bottom of this body here. So I think if we are going to get a retracement, we should come back to this level. We've got our first target towards the 111 level, so down by these candles. Sorry, these two bodies here and this bottom here. And I've isolated the Trump rally candle. We're saying this could all be retraced. And we've got a second level to here, which is just around the 105.50 level. Top of this candle here, the breakout. I'll put the bottom of that candle there. But looking possibly for the whole Trump rally to be retraced even. So 111 first level, 105.50 the second level. I think 114.50 is resistance. So that's the way we see it on the monthly chart. Now let's move to the daily chart. Daily chart of USD JPY. What I'm going to do is just go through the chart in a moment and where I think price action might go. But before we do that, let's have a look at the latest CFTC Net Traders positions. What I'm going to do very quickly for new viewers, just explain how we use them. Regular viewers might want to scroll forward a minute or so. But in terms of the positions themselves, they represent positions on the Chicago Mercantile Exchange. It's a futures market, and basically it's a sizable part of the Forex markets. And by looking at two groups on this report and how their positions line up, we can get clues to where the chart may go next. Now, in terms of the two groups, I've isolated them, non-commercial in red. They're basically large speculative funds. They have big positions that have to be reported to the exchange under law. So you've got hedge funds, currency funds, etc. Managed money, traditionally or historically on this report, tends to be caught out at market tops. They tend to be heavily net long. They tend to be also be heavily net short at important market bottoms. They get caught on the turn. Okay. Now, in terms of the next group, it's the commercials, and we need to see how these people line up against the non-commercials. Commercials, smart money in our view. They're hedgers. They're not making or losing any money. What they're doing is they're hedging their cash position in the futures markets to lock in an exchange rate. They're big corporations doing business across borders. Yeah, think Apple, Boeing, Samsung. Okay, so not making or losing any money. They're very objective because of this. They have a deep knowledge of fair value of a currency pair. They'll only move their hedges aggressively if a currency moves too far from fair value. Now, in terms of how we line up this week, and I'm going to relate how we line up this week to a couple of weeks ago because it's quite important. But this week, okay, in terms of the non-commercials, they've got 32,000 odd bullish bets on the yen, 90,000 bearish bets. So they're basically nearly 3 to 1 in terms of their bearish Japanese yen bets. So that makes them bullish USD JPY by a ratio of 3 to 1. Now, in terms of the commercials, they've got bullish bets of just over 152,000 positions, bearish bets on the yen of 71,000. So they're roughly, or they're just over 2 to 1 in terms of bullish yen bets or being bearish USD JPY. Now, in terms of their movement this week, they basically reduced their ratio from 3 to 1 to 2 to 1. Now, when we were at the top, both groups were opposed by 3 to 1, and non-commercials were buying into the 118 level, the commercials were selling heavily. That was the indication for the turn. This candle pokes above 118, this candle comes up to test, we reverse, come back through, try and get above, and then we fail, we move to the downside. Okay, so we've been tracking this move on the way down. Our preferred way of doing it, as regular viewers know, is basically when we get to oversold, take out 50% of our trade and wait to sell the bounce. Like for instance here, sell the bounce, here, sell the bounce. And normally when you get a trend or starting to develop, the 20-day moving average will normally be good resistance. Okay, so here especially. Now, our latest position is 114.35, and what we've done is we've fallen down towards the 112 level. We've tested it, but we haven't taken it out yet. So about 112.40, we've taken in half our position. So by doing this, we've lightened our exposure. We can put it back on the bounce if necessary. Now, I think there is going to be a potential bounce, and the reason for this is the commercials have added just over 14,000 short yen positions, i.e. they're basically taking a USD JPY long view. Okay, now the commercials will do this when it does move to oversold, or a currency pair moves oversold, and it's a big enough move to indicate a bounce. For us, it doesn't indicate a trend change. The commercials have not really moved aggressively long in this downtrend, and just as importantly, the non-commercials still hold the same ratio of bullish dollar bets that they had when we were at the top, or nearly. Okay, so there's still plenty of them to get flushed out on the stop in our view, but for us, a little bit oversold in the short term. We noted 114.50 on the monthly chart. We look at it on the daily chart. We got the 114 level, in my view, here, that bottom of this candle, top, as resistance. It's also a round number. 20-day moving average right behind it, then a down sloping trend line, which is 114.50, which is the line in the sand on the monthly chart. So what we are going to do, or what I think we'll do, is we'll be looking to put our 50% back in on weakness into the 114 level. Okay, even if we get stopped out because we took it out at a lower price, we'll come out at an overall profit on our position. Okay, Then if we run above, decisively take out the 20-day moving average, we're looking to sell back through it, get above 114.50, go up to 115. We'll be looking to sell weakness. We don't think this trend is over yet, the down move, but USD JPY can be a wild contract. So we'll have to see how things evolve. That's just the way I'm seeing the chart at this moment in time. Now, in terms of, obviously we're still in. If we do run on to test 111, we still got half our positioning. But I do have the feeling we're going to have the bounce first, then we're going to come down to 111. And like I said on the monthly chart, I think this whole Trump rally could be retraced down to around 105.15. See this big reversal candle here starts the big move up. Now we're starting to snake down. So in terms of the chart, personally I expect to bounce. I think that bounce will be a selling opportunity. We'll see how things evolve. That's the way I see the position today. Now let's have a look at AUD USD and the net traders positions there. Before we look at the net traders positions, I put up the Aussie dollar against the US dollar. I put up a monthly chart just to show what I consider to be the key levels. Now, in terms of Aussie dollar, US dollar, it's been a nice downtrend. Then we have got sideways price action really since July 2015. Now, we're coming up now to test the 77 level, which I think is good resistance. We did have a couple of pokes above, try and test 78, but they failed back down. And we're coming in to the top of the range, so we're going to see if with this holds. So we've got a feeling it will, which will become clear when I come to the daily chart. Then we've got 72 really as good support here, then probably down at 70 here, but really focused on 72 at the moment. Also, there's a little bit of support here, I think, through these two red candles at 74. So that's how I see the big levels on the monthly chart. So let's go and take a look at the daily chart and where we think prices might go. We are on AUD USD daily. Just look at the chart where I think things might go in a moment. I'm just going to look at the CFTC net traders. And on this week's report, we don't have a big divergence. However, I think the movements are significant in terms of what has gone on in the last couple of weeks on the net traders positions, which I'll explain. But let's take a look at this week's report. What do we got? Non-commercials, 59,000 odd long, 47,000 odd short. So they're just mildly bullish of the Aussie dollar, US dollar. In terms of commercials, long by 14,000, short by 30,000. So they've moved to a 2 to 1 ratio in terms of shorts. Now we don't have big divergence between the groups, so I think the movements are interesting in terms of what's happened over the last couple of weeks or last few weeks. The non-commercials were heavily short the Aussie dollar. Here they've got cleaned out on stop, okay, or whatever, and now they've gone long over the last couple of weeks. They're buying the rally basically. So although they're only mildly bullish, they've taken out a big number of shorts and they will accelerate their buying in our view. The commercials done exactly the opposite of the non-commercials. They were heavily net long the Aussie dollar by a ratio of over 3 to 1 at one stage in the rally up here. And over the last couple of weeks, they have moved to a short position. And this week, on this move aggressively up, they've come in very aggressively short. Added 5,000 odd shorts in, taken out 830 longs. So they've put 6,000 shorts in effectively. Now, in terms of reading this report regularly, they did it here. Okay, they aggressively sold while the non-commercials were buying. Into the 76, 77 level. So they really loaded up on their shorts and you do see a nice fall. So from our perspective, this report is telling us the commercials are now saying, we're too far from fair value. I'm sure that they'll be adding in shorts on this rally. Obviously, the report is from last Tuesday, which is back here. Again, this blue candle here non-commercials will probably be buying. So from our perspective, we're looking for a top. Now, in terms of how to play the top, well, we know that 77, which is where we've got double top here, is resistance on the monthly chart. And then we said we had a couple of pokes above 78. You can't see the 78 resistance level on this smaller chart, obviously a smaller time frame. But okay, we're up at 77 now. My view would be we come back through nearby support, which is actually the low of this candle here. We should come to the downside, okay? In terms of if we rally up above 77, let's say we hit this resistance level here, which is about 77.30. Don't do anything in my view. I just wait for it to come back through 77 and sell it, okay? If we moved on even further, let's say to these two candles here above 77.50, I'd look to sell any momentum weakness. Stops obviously back behind the 78 level, which is where the spikes failed on the monthly chart, the two spikes we saw. So basically, take her on weakness, or if she does move higher, back through the round number, or on, in my view, any momentum weakness into 78. Now, in terms of support, put 72 level there, which is the bottom of the channel really that we looked at on the monthly chart. Looked at 74 being kind of what I considered minor support on the monthly chart. When I look at the daily, I kind of like the 73.50 level, where we had these candles, three candles here, two try and test, one gets above, find support, then off we go. So I'm going to put 73.50 as my first target here, although obviously if prices do come down, I'll be watching them as they come down towards 74 as well. So we'll just see how things develop. For us, on this report we got from the CFTC net traders, it's not the two groups at big divergences against each other. It's the movements in the group, speed of change, is possibly indicating that we might see a good reversal in AUD USD. I did get stopped out of my last short trade, so I'm hoping this one will bring a better result. We'll see what happens, but that now completes my analysis of both currency pairs. I'll go back off that analysis there of USD JPY and AUD USD. Now, in terms of our view, that is it as it is today. Of course, our view can change in line with the market action. If you want our updated daily analysis on those two pairs and 7 other majors, you can simply click on the link beneath this video. Now, in terms of for new viewers of our videos, I just need to stress the CFTC Net Traders is very much a backup tool. You need to time everything technically, okay? Got to keep in mind that the commercials can be wrong in the short term. It doesn't matter to them. They're not making or losing any money. I think that's particularly applicable in terms of AUD USD, where we're basically trying to pick a market turn. Okay, so we're trying to pick a market turn, so we're using what we consider to be good stop loss protection. If we get stopped out, we will, I think, get another bite of the cherry, get back in. We think there is significant downside now in the pair, so we shall see in terms of USD JPY. I do have a feeling that probably going to get a bounce. We're stopped out on the bounce, so we'll get back in probably. Now, in terms of the move down, USD JPY, it's been a really nice move down. We haven't been in the market all the time. We have been stopped out on 2 occasions, and we've come back in again. But overall, we've got about 3/4 of that move, so that is fine. So I'm probably overemphasizing the point. Use good stop protection. Basically, you can always get back in. Okay, so we're going to see what happens in those pairs. I'll probably come back and update them next week, but that is the video for today. Thank you very much for watching me as usual. Take care. Have a good day.